Hi, this is Harsha Venkatesh from Dwaith Funds. I want to talk a little bit about the uncertainty which is there in the market, and people are not clear about what will happen in the Middle East. You know, Iran and US, they have their own fights going on. Israel is adding more fuel to fire, and Indian markets are always, akin to whenever the US sneezes, India catches cold. So our market has caught a cold and things have fallen down. How do we look at investing in a scenario like this? You know, I was rereading a book which I tend to go towards. It's called Wealth, War and Wisdom by Barton Biggs. It's a very interesting book on how you can invest during uncertainty and war type scenarios. So Barton Biggs covers the period in last century, especially from the time when you had two world wars, World War I, World War II, post-wars. What exactly happened to equity markets? What exactly happened to investments? How do you actually look at slightly longer term investments? I think today in our uncertainty, where you are not too sure if this whole conflict will become a major conflict, will it turn into a world war, will it be a regional conflict? The way to look at things is you have to have diversified assets, invest into various things, look at investing into companies which have fundamentally strong capabilities in the areas which they operate, and fundamentally look at investing for periods which are not like 6 months to a year. You look at slightly longer periods of time. How would the companies operate in a 3-year or a 5-year horizon? Because a lot of companies today in the market are available at a single digit PEs. What do I mean by PE? Price to earnings multiple being less than 10, especially for some of the companies in the mid cap segments which are beaten down quite a bit. The earnings visibility is quite large, and in a year, 2 years time, the kind of capex they have done or about to complete, so that will lead to availability of enough capital as well as enough capability within their company to grow 3 times, 5 times what they are today. So I would say that investing in something like that totally makes sense in a scenario where you are getting those companies for very low multiples, and I'm pretty sure in 2 years time we would be getting more than 20 to 25% return on a yearly CAGR basis. So I think now is probably the right time to put in money, if you ask. Just don't be looking at your returns next 3 months, next 6 months. Be a little bit more focused. Don't keep looking at the stock prices. Look at things as they pan out over the next 3 to 5 years.